How do startups become venture capital unicorns? Imagine a startup that turns into a company valued at over $1 billion. How does that happen? It's not magic, but a mix of smart moves, timing, and a bit of luck. When a startup reaches this level, it's called a venture capital unicorn. This milestone shows the company has grown fast, has a big market potential, and investors believe in its future. Getting there usually means going through several rounds of venture capital funding. Venture capital firms invest money in exchange for ownership stakes. These investments help startups grow quickly, develop new products, and reach more customers. Each funding round can boost the company's valuation, pushing it closer to or beyond $1 billion. A key part of becoming a unicorn is having an innovative business model or technology. These startups often shake up traditional industries with new ideas or tools. This innovation gives them a competitive edge and helps them tap into large markets. For example, a startup offering a new way to shop online or a unique app that solves a common problem can attract lots of attention. Another important factor is the size of the market they target. Successful unicorns focus on markets with a big total addressable market. That means there's enough demand to support rapid growth. If a company can capture even a small part of a huge market, it can become very valuable quickly. Speed is also vital. Unicorns show rapid growth, often doubling or tripling revenue each year. This fast expansion catches the eye of venture capitalists looking for high returns. They want to see that the startup can scale and handle increased demand without losing quality or customer satisfaction. Building a strong market position helps too. Many unicorns create a competitive moat through network effects, proprietary technology, or brand loyalty. These defenses make it harder for competitors to take market share away. Substantial venture capital backing is essential. Multiple funding rounds from different firms bring in the money needed for product development, marketing, and hiring. As the startup raises more money, its valuation increases, bringing it closer to that billion-dollar mark. It's important to note that these companies stay private during this process. They are not yet public companies on stock exchanges. Staying private allows them to focus on growth without the pressure of quarterly earnings reports. For founders, networking with venture capitalists early on is a smart move. Building relationships can help secure funding when needed. They should also focus on finding product-market fit, making sure their product solves a real problem for a large audience. Showing clear growth metrics and scalability makes them more attractive to investors. Getting strategic advice and mentorship from experienced investors can open doors to new opportunities. Preparing for multiple funding rounds by refining the business model and expanding market reach is also key. Reaching unicorn status is tough but rewarding. It shows a startup's ability to innovate, grow fast, and lead in its industry. For founders, understanding these steps can help them attract the right investment and turn their vision into a billion-dollar company.